Hey there, welcome back to No Pants Profits. And today we are going to talk about the ABCs of investing. Now, this is not getting started with investing, this is the ABCs of investing. Imagine if you were to go ahead and any stock app and just take every app that begins with A, every app not app, every stock that begins with A, every stock that begins with B, every stock that begins with C, every stock that begins with D, meaning just the first thing that comes up. How will that do over time? So what we're going to do today is we're going to set up that portfolio. I came up with this idea, let's not lie. I was out drinking with some friends and I was like, what has someone not done? And I've said, no one's that I've seen has bought these single symbols and watched how they've done over time. So I want to talk about kind of the baseline for this theory, and I'm going to show you the stocks that I chose, because some letters don't have stocks that are just one letter, so we had to get a little bit creative here. But the main premise of this, if you've ever seen before, is the simple premise that if you've ever seen this article before, a monkey can beat the market. I'm sure you've heard that. If a monkey picks a whole bunch of random stocks, the monkey's going to do better than the market. Now, we're not talking about a monkey right now, but we're talking about someone who's rather novice and literally just goes into an app and goes A, picks the first thing that comes with A. B, picks the first thing that comes with B. C, picks the first thing that comes with C. There's not one for every single number, every single letter, but there are for most. Now, someone who did something similar to this, but not the same, because they had an interesting bucket to choose from, was Graham Stephan. And I want to kind of show you a little bit of his video to show you he actually had about 2 years ago a monkey.
Randomly generated stocks. We're going to fold each one up. We're going to put them into the bowl. We're going to let Monkey Boo pick out 10 of them for you guys. Can you do it, Boo? Yeah. Can you pick the winners? Can you pick the best ones? All right, to make sure that Boo would pick a stock, each.
Now, what you'll see is there's 30 stocks there, so it's not just random selection. There are Netflix. There is, and this was during the illness, but there's large companies, GE, Netflix. I know that Tesla's in there. Of course, Tesla's in there. But we're not going to focus on any of those companies. But some of these companies we're going to talk about, you may have actually heard of before. So I'm going to show you the companies, explain the methodology. We're going to look at the companies and see if the companies are profitable or not, and see if this is a good idea. And then we're actually going to pull the trigger. It is Friday, August 12th, 2022. It is 12:32 a.m. I am doing this while the market is closed, and you will see why very shortly. But let me show you the stocks. So instead of having a monkey choose the stocks.
All right, Boo. Pick out another one. Oh my goodness, everybody will be excited about that one. Boo picked Tesla.
Boo picked Tesla. That was probably a good idea in 2020, but we're in 2022 now. So all I did, let me give you the methodology to how I got to this. I'm not going to use Robinhood to actually do this, because I do actively use Robinhood, but the methodology is very simple. I literally just type in the letter A and looked for the stock Agilent that had the symbol A. And you can see, hey, look, there's A. I can type in the letter B. We've got the stock Barnes, which has the letter B, and so on. But what you'll notice is some stocks, this is why this list was created, is some stocks, such as the letter I, the letter P, and the letter Q, don't actually have stocks tied directly to them. So I literally went very simply. I will show you, because this is going to be as fair as possible, almost like a monkey or an uninformed investor did it. I would so if I went to I, which is the first one that doesn't have a symbol, as you can see right there, I just went IA. Nope, IAA, that's an extra letter. IB. IBB. We're looking for the shortest symbol possible. IC. And ID, and you'll see parts ID, or, well, IBCD. Okay, so I actually chose the wrong company, because there is a parts ID. So, kind of learn things on the fly. So, you know what? Let's go ahead. I'm perfectly fine showing you this, because people mess up, and sometimes people mess up in real time. So instead of IE, we're going to go with ID. So that is parts ID. We're going to take a look at all these companies do technology-driven digital commerce, A, B, C, D, E. I have IE. I messed up. So I just go ID stock, IDSTOCK. And we'll see Parts ID Inc. And what we're putting on this sheet right now is when we're starting. We're just putting in. I thought I pre-did all my research, but that's what happens when you come up with an idea when you're drinking. So let's just paste that. I think the rest are probably correct. And then we're going to track the market cap over time. And I'll show you the methodology to how this all works. And the good news is this was done at 12:30 in the morning, so nothing is happening. So I'm just copying very, very small market cap. But let's just, we'll go. Let's paste it. And these are the ones that I've already bought as the green ones. So I do have to replace IE with ID. And just for important purposes, all these other ones do come up with just a letter. But let's go ahead. Let's make sure there's no PA. No, PayPal, but, so PB is the first one that comes up, which is a Prosperity Brothers. And then QD, I think, is the first one. So QA. Nope. QB. QC. QD. And you'll see Qudian. Now, the important thing is, technically, with Q, just full disclosure, I could have gone the easy route out and gone QQQ, but that's not an individual stock. What we're trying to make is a fund that's so easy that a keyboard monkey could actually go ahead and pick it. So I have the ones in green I've already gone ahead and ordered, but I will show you, I'm actually not going to be doing this on Robinhood. And why I'm not going to be doing this on Robinhood, the ones in green here, why I'm not going to do this on Robinhood is due to payment for order flow. Yes, what I want to do is I want to buy $100 in each of these stocks, but I want to buy it at a fair price. So I'm actually going to use something other than Robinhood. I'm going to use something called Public. And I think this used to be called a Mastodon or Matter or something like that. But this is an application that allows me to build my portfolio, and I've got a whole bunch of pending market orders. So here's Public. And I've got all the pending market orders for $100. Now, I will say QD, very important. I cannot buy fractional shares of QD. So I have a limit buy-in for QD for $99.68 because I have to buy full shares. So everything else will have exactly 100 shares other than QD. But let's go ahead. Let's replace that IE with ID, and I'll show you how it works. So GOM. So IE, I'll hit cancel right here. And if I search ID, let's search, what's the name of it? Parts Limited. Parts ID. All right, so unfortunately, Parts ID is not a company I can actually go with. So I guess that's why I went IE. So we're going to go ahead, we're going to switch that back. I want to show full transparency. The full list of stocks will be below, but it's not one that can be invested in the application that I'm using, actually. Let's make life easy. Okay. So we're going to redo that last step. All right. So Ivanhoe Electric is the one that we're going to go with. So again, just to kind of show you that logic, I want to buy two stocks right now, and then we're going to take a look. So ID, we're going with what we can buy in the application we can buy it in. So ID is, I think I had, these are not well-known companies, some of the IVAN. Ivanhoe Electric. And then all I'm doing is I'm saying buy. I'm saying I want to buy $100 worth, which fortunately everything but QD I am able to do that with. And I don't want to leave a tip right now. I have left some tips on some other stocks, but I don't want to really throw that off. And this is all that's going to be in the portfolio. So the idea is there's going to be $2,600 invested in the portfolio. If I want to make it public, I could say I want to make it public. Now, what's cool, the last stock I want to buy right now, I want to kind of show you the logic, is if I wanted to buy, just to show you the last stock I had bought, I'm going to have these all in before the market opens, but if I wanted to buy, say, AT&T, I could just go ahead and hit T, and I can click AT&T. I can hit buy slices. I want to buy $100 worth. And again, I know that what's important is, unlike Robinhood, unlike Webull, unlike all the other ones, let's try that again. Network connection was lost. Weird. Slices. $100. There we go. So we can buy that right there. And unlike Webull, or unlike the other ones like that, the important thing, or Robinhood, or any of those like that, the important thing here is that we're going to get a fair price. And that's why I use public, because it's one of the only free trading apps that does not use payment for order flow. Now, what I'm going to do is I'm going to buy the rest of these offline, but they'll all be in before the market opens. But what I want to do is I kind of want to go over them and give you an idea on these stocks, if they're making money, a little bit of the history. We're not going to dig into every single one. I'm not going to keep you for too long, maybe another 10 minutes or so. But we're going to look at it in Robinhood. Why I like Robinhood is it's the easiest way to look at stuff. Agilent, what do? Provision application focused solutions, life sciences. They're a big company founded in 1999. They have a $13.9 billion market cap, and all of the Morningstar analysts are saying to buy and to hold it. And do they make money? Yes, they make money. So you know what? That's a good A. So I'm gonna turn that a nice solid green, because I think that's a good A. So you see what I'm doing is I'm kind of marking over there. Let's take a look at Barnes. And if we're looking at Barnes, we'll see they have a market cap of $1.75 billion. They do make money. They have a price-earnings ratio. A lot of newer tech companies don't make a profit, so they don't have a price-earnings ratio. The price-earnings ratio is not too high. There is no Morningstar analysis on this, but it does actually seem to be reasonably making money. It has a reasonable, not great, but reasonable price-earnings ratio. So we're going to leave that in the green. It already was. Doesn't have a huge, long history or anything like that. Now, the next one, C, is Citigroup. Citigroup is a bank or a conglomerate of banks. It's a holding company which engages in financial products. So they can get hit by mortgages with this raising interest rate and, you know, people not getting the mortgages as much. Analysts are saying from the Morningstar, they're saying to buy and hold it. Does Citigroup make money? I think they do. Yep, Citigroup makes money. So these, again, revenue and earnings. You know, do they make money? Do they make revenue? These are not the worst companies to pick. So again, I'm going to go ahead. I'm going to jump back here. I'm going to make that a nice dark green right there, just like I have A. Again, I don't think B's terrible. They're in the green. So in the green is good. Let's take a look at D for Dominion Energy. Again, we're looking at this at the close of business on Thursday, August 11th, 2022. We will see. A lot of people are saying to buy and hold, not to sell. Guess what? They make money. Looks good. Been around since 1983. They make money. They seem like a stable company. Again, we're not choosing these companies. We're letting the companies choose us, but we're just seeing if anything's going to be fun and bite us in the butt. And this is one I've literally never heard of before, which is E, which sounds like a crypto. Well, let's see. This is E, or Eni SpA. Engages in the exploration, production, refining, and sale of oil, gas, and electricity. Ooh, I wish I would have had this today. When oil and gas and electricity, they are based in Rome, but they do trade on the American Stock Exchange, but that stock is not supported in Robinhood. But what's nice is, even though it's not supported in Robinhood, I believe, let's make sure we've got it in public. And we'll take a look at the pending orders. We'll go right here. I am able to buy it over here. So that's the nice thing, but we can still look at the stats. Everybody's saying to hold those. It might be, hey, so far, there's no sell. Earnings look good. Everything looks good. That's another one of those companies that we're going to go ahead and we are going to go green. Now, if you've watched this channel for a while, the next company will be super duper familiar to you. Ford. Ford really needs no introduction. I will tell you very soon, as in the next few weeks, I will be getting my F-150 Lightning, and I will be happy to kind of show you a different perspective than everybody else is actually showing on this. Ford, I've actually got some Ford options, so you got to see what those Ford options are doing. I'm not buying options, I'm buying actual shares. I don't question Ford at all. This actually has the highest sell rating of all of them, but the nice thing that Ford has is a dividend. So, you know, we're going to get money back on our investment. I love Ford. I am a big Ford holder. I'm going to do another video on Ford very soon. I will tell you, I went and evened out the amount in total market cap I have both in Tesla and Ford the other day, and we will kind of be talking about that once I get my F-150 and kind of the logic to why. The next one is Genpak Ltd. I've not heard of this company. Genpak Ltd. It engages in business process management outsourcing shared services, information outsourcing. It's in Hamilton, so it looks like it's Canadian A. Founded in 1997. Everyone says to hold or to buy it. Earnings are good. Price earnings ratio is really good. Yeah, I'm very happy with this one. So again, we're checking if this could be a strategy that one can use, just buying the first letter that you type in. Next one is one that we've probably all heard of before, which is Hyatt Hotels. It got hit pretty hard during the illness, but realistically, Hyatt Hotels has been up rather recently. Let's take a look at charts. Oh my God, the past week up 5%, past month up 21%, past 3 months up 8%. So it's still got, and if we go the past year, it's probably not. Okay, it's actually up. So we are buying near the top-ish or the heading up here. We can see they are making money. Everybody says to own it from a Brightstar. Now, Brightstar is an analysis that you can pay for separately, or you can, well, not Brightstar, Morningstar, sorry. Morningstar is an analysis that you can pay for separately, or you can get Morningstar as part of Robinhood Premium. So that's why I'm using it there. It's a bunch of analysts together. It's kind of like, if you think of it like the Rotten Tomatoes of the tech, of the stock world. Is kind of the way to think of it. I will see open, high, low, price earnings ratio. You've got your economic moats, you've got everything, but you'll see, other than, look, they lost money during the illness, but it's an interesting one. I like it. Ivanhoe Electric, because we could not buy that D, or we couldn't buy that IE. Wait, that would be IE would be the company there. Again, I like to do this live. Let's take a look at IE. Because ID was just not viable. Ivanhoe Electric. I'm not really sure what they do. The question is, do they make money? Is the major question. So let's see. Founded in 2020, so in Canada. They don't have any earnings. I don't even know how long the stock's been around. Oh my God. Is this a smart idea? Who knows? You could see it IPO'd on June 28th, and it immediately took a poo-poo, and it is down 17%. But you know what? I'm just crazy enough to buy it. Now, they've not made money, so we're going to be perfectly honest, and this is probably, so far in the list that we've looked at so far, the absolute riskiest thing we've looked at. So we will, let's mark it a little bit darker. We're going to mark it as so. Riskiest thing gets marked. Very, very risky. Again, all these will be listed below. Another one, kind of weird, that they got such a good symbol. So Johnson & Johnson, or someone doesn't have this, but just J. Jacob Engineering. Did reasonably today. It's a very high-priced stock. I mean, we're going to get about a share of it. Based in Dallas, Texas. Founded a long time ago. And Jacob Engineering engages in diverse range of technical, professional... Okay, so it's a construction company. Company was founded... Listed J for Jacobs Engineering. The analyst ratings say to not only hold it, but to very strong buy, one of the strongest buys that we've seen. And do they make money? Hell yeah, they make money. Price earnings ratio is really actually pretty good. You know what? That goes in the solid, hey, this could be good category. All right. Next one. One that we've probably all heard of before is Kellogg's. So we just type in the K right there, and we will get Kellogg. They make all the breakfast cereals and all kinds of Kellogg engages in manufacturing ready-to-eat cereal and convenience foods. So they make all kinds. They make Cheez-Its, Pringles, and all the Kellogg foods. They operate in Latin America. Founded in 1906. Look at that news story. They're gonna pay a larger dividend. This is another dividend company. So that means we gonna get some money on top of our money. So our money makes even more money on top of our money. Heyo, analysts. Again, that's the highest sell. Let's see what the Bears say. Cohort of Kellogg's domestic and unionized employees were on strike for 12 weeks. Cost reduction efforts haven't been beneficial. Kellogg's is trying to keep up with the rapid evolution of consumer trends. So there is the most negative sentiment we've seen so far in something that has a Morningstar report has actually been with Kellogg's. But in the end of the day, Kellogg's makes money and they pay a dividend and they have a really good PE ratio. So guess what? Kellogg's goes nice and green. these are companies, the dark green ones are ones that I would probably actually invest in, not really individually, but I put them in a pool, put a little bit in everything, just kind of have a wide diversified market growth. A lot of people go, well, why wouldn't you just buy an index fund like QQQ or something like that? Well, yeah, you might, but that's another thing. Now, the next one to come up is Lowe's. Now, there are two Lowe's. There's Lowe's, the store that's where you buy like Home Depot, and then there's L, which is Lowe's, which is the hotel chain. So we've got Lowe's, the hotel chain, which actually was up about 1% today. We'll see about Lowe's. Lowe's operates a holding company, has a whole bunch of operates a holding company which engages. Oh, sorry, not Lowe's, the hotel chain. Ah, I thought I recognized the logo. I apologize. It is another oil company. Diamond Offshore Drilling Rigs. It's a drilling company. Good PE ratio. Always making money. Does not have any Morningstar backing, but they are making money. And they do have one, but a very small dividend. So what I'm going to do, I'm going to leave this in the same bucket as Barnes. Don't know much about it. In the finance side, they make money. They are green, but it's not Lowe's Hotels, and it's not Lowe's the department store. So let's look at the next one, which is M, which stands for, in this case, Macy's. So let's see, Macy's. Up a lot today, which might not be the smartest idea to buy. On the 11th, it was up big. I'm going to be buying it on the 12th. But you see, reasonable bull bear report. Again, if you don't pay that $5 a month to Robinhood Gold, it's gold. It's worth what it's worth. PE ratio is pretty good. Yeah. Looks okay. And even during the illness, they made money. So, if we're looking back and during the illness, they made money. So, you know what? I'm going to say Macy's is actually a pretty strong buy for this experiment. I'm not digging in that deep to say pretty strong buy overall. The next one is one I've not heard of before, so I don't know what the heck they do. But it is N. LMN is NiSource. Yeah. And I might have to type in the whole name here. NiSource. So there is no N. That's important. There is no N. It's N-I. Because let's just make sure. Again, we're doing this live. Yep, there is no N. So we do have N-I, which is NiSource. So that is another exception to the rule. I have changed it on the chart here as well. Let's take a look at. I'm just going to show you N-A. Oh, hold on. Again, interesting. We've got another NA, so we're actually going to change this on the fly to Nano Labs. Again, we're doing this like a monkey would do it. So let's just put in NA stock. I made this list out at a bar, to be honest with you. It's kind of a strange bet. So that is the National Bank of Canada, which is an interesting play right there. So we got our NA. Let's put in that it is the National Bank of Canada. In our ABCs of investing, we're not going with NiSource. And let's just check the market cap, because that is an important thing. What that is the share price is not as important as the market cap, and we're not really caring about the share price because we're buying $100 of each, and whatever $100 of each gets us, hey, $100 of each actually gets us. So we're gonna case without formatting. Okay. Perfect. So let's take a look at NA, National Bank of Canada. Hold up. Again, the monkey buys things weirdly sometimes. So let's just put in Nano Labs. Nano Labs stock. NASDAQ. NA. So I'm going to make sure I switch this around, and I'm going to do this live so you can kind of see. So this is not the National Bank of Canada, because that was on the Canadian Stock Exchange. But I do like to kind of show you the process, so that's why I do show this. But you do have the list below if you're not interested in seeing all that, but kind of an interesting, this is not even $1 billion company. We're going to take a look at what they say about Nanolabs. So we went from a $31 billion company to a $358 million company. Nanolabs. ADR. Okay, let's take a look here. ADR, it's an American shares of a non-US based company. So it's a way to actually buy that US based company. They make storage solutions. Not storage solutions like a shed, but they're a holding company, design and production of fabless integrated circuits, high throughput computing chips. So yeah, it makes and it's based in China. It looks like they don't make money. Yeah, or they're a new company. Let's just see. No, they're not a new company. Yeah, they are a new company. Listed on July 12th, 2022. So this is a rather new company. No real history of what's going on. No Morningstar. Nothing like that. But you know what? Let's just make sure we can actually buy it here. So we're going to go ahead. HIJKLMNOP. So Ni. We're going to cancel. And we're going to look for Nanolabs. NANO. Yes. Okay. I will find that, but you know what? It looks like why I went with that one is because I can't actually buy. So let's go ahead. We're going to go back to NiSource. So again, I want to be perfectly clear with you guys. NiSource is the one that I'm going to be buying. Again, we have to live within the bounds of our experiment. I'm setting up the experiment in public. I want to work through the experiment because I think this really kind of shows a level of transparency. Because if you can't show your work, then don't do the job. Okay. Looks like they might be doing some maintenance right now on this site. Okay. Cool. They might be doing some maintenance right now in Webull because it is 1 o'clock in the morning Eastern Standard Time. But let's take a look at NiSource because that's the one I can buy. NI. What does NiSource actually do right here? NiSource is based in Indiana. Holding company engages in natural gas. So again, you know, we've got these natural gas companies founded on the year I was born, and everybody says, hold on, everybody says to buy or hold. So I am perfectly fine with NiSource. Everything actually looks pretty good on the NiSource end. Let's see where we're at though. Okay. Next we've got which is a great company. It is not a company, it is a real estate fund. So it's Realty income, and it's based on what they're really doing is they're paying you in dividends. Yes, the stock goes up, but the payout is designed to go out in dividends, generating dependable monthly cash flow. So you get monthly dividends. It's a Realty income. A lot of people say to buy it and hold it. Nobody's actually saying to sell it. Looks pretty good, and they make money because they make money. They're in the real estate world. That is one, in full disclosure, that is a stock that I do actually own myself. Much like Forward, outside of this experiment, I do actually own that stock myself. Then we've got PB, or Prosperity Bank Shares. So let's jump over and let's take a look at PB. PB. Prosperity. Prosperity Bank Shares. It's a holding company which engages financial products and solutions. It offers retail and commercial banking. Founded in Houston, Texas. Has some sell recommendations, has some hold recommendations. They make money. They have a reasonable profit earnings ratio. Yeah, not one that excites me a lot personally, but I see no reason. I see no red flag, if that makes sense. I see no red flag. All right. Next one is QD, and again we got there by going QA. No. QB, QC, QD. Qudian. This is a company that I was not able to actually buy $100 worth. I had to buy a certain number of shares worth, but I'm going to get as close to $100 as possible. It's a technology platform that is for online consumer experience in China, artificial intelligence, machine learning to help the financial experience. Now, this is a risky company. What you'll notice is they don't make money, so they have no price earnings ratio. They have an extremely small market cap, and I cannot buy fractional. In the real world, we're not in the real world right now. A monkey on the keyboard is picking stocks. But in the real world, this is a red flag. Not something I would really want to get into in the real world. Then we've got Ryder, which you may know from the Ryder trucks. So that's R. Ryder made some reasonably good money today. They are based right where I am. They're based in South Florida. Got a good price earnings ratio. All the analysts are saying to buy it. That look at the as people are moving, you see that bell curve up and to the right. Logistics and transportation company, they're a moving company. I think we've all seen Ryder trucks before. That might actually become, now that I've seen kind of how they're doing and the recommendations, that might become a core company. Again, all of these that are green might become actual holding. I mean, I'm going to hold on to them for this experiment. We'll talk about when we're going to check on it. But we might hold on there for this experiment. And we've got S next, which is Sentinel One. Which, what do? They are provision of endpoint security software. It is basically, it is a company that watches out for DDoS attacks. Founded, security that detects models and predicts threat behavior, dynamic denial of service, taking down websites and everything like that. And you'll notice they're in Mountain View, which is kind of the area where Google and Apple and all those other companies actually happen to be. Everyone says buy. They don't have earnings, so that's important. They're not making money, but they are in an industry that is a growing industry all the time. So I'm actually just going to leave that one the standard green. Now we're going to look at some that I haven't gone ahead and hit the buy button on yet, but I will. I promise you, I will. But if we click right here, we've got AT&T. Interesting stock, dividend stock. So big dividend stock, and something I do own outside of this experiment. It is a little risky, has a nice price earnings ratio, has a beautiful friggin' dividend. I mean, look at this dividend. It's paying out a 9% dividend. But remember, a dividend comes off of the earnings of the stock. But again, outside of this experiment, I really like AT&T. And you can see they do make money, even though that money does seem to be going down and to the right instead of up and to the right. I do still like where AT&T is headed. So let's go ahead. And the whole goal is to have a more dark green stocks that I like. Next one is Unity. So U stands for Unity. And the nice thing is there's no double letter stocks for the rest of this. We've got Unity, which you may have heard of Unity. They make a lot of video game software. They develop it's a Unity engine that's used in a lot of video games. I'm not a gamer myself. I'm a Mac user, but wubba-lubba-dub-dub in the Rick and Morty side. But they don't make money. That's an important thing. But a lot of people are still saying to hold on to them because they are in, let's be very clear, they're in video games, but they're also in AI and 3D content and everything like that. So, it's not just all fun and games. They're in a lot of things that could potentially make some money. I will tell you, those are stocks that I would elsewise buy outside of this whole thing. Let me make that normal green. Okay. Those are companies I would buy. Another one. Now, this is, I believe, actually, the reason I'm tracking market cap is to see what is the biggest company on this list. And I believe the biggest company on this list is Visa. So the biggest company on this list is Visa. Let's take a look. Everybody's saying to hold it or buy it. Medium economic moat. They make money. They have a good price earnings ratio, and they pay a dividend. It's a tiny dividend, but they pay a dividend. I guess is the spectrum of things. I like Visa. So we got Visa, and then next up we've got PRSTUVWXYNZ. Yes, I have to sing the song. Next we've got Wayfair, which has gotten really, really, really badly hit in the, look at that chart right there. It's not healthy. Look at that chart even for the day. It kind of traces that. But you know what? We're gonna buy it. They don't make money. And it's got a pretty high sell recommendation. And remember, Morningstar is kind of a group of financial advisors that are saying to buy or not to buy or anything like that. And that is going to be one that, personally, I would stay the heck away from Wayfair. But the experiment says, look, we don't even have a chance to substitute it. It's one of those companies that's kind of a weird one. Now, the next one is a really old company, I believe. It's been around for a while. I mean, it's called United States Steel. I have a feeling. I'm not 100% sure, but let's see. Let's see. United States Steel. 1901. Yep, talk about an old company. Kind of seems like something that has been around for a while. Challenging year for steel. Got some sell pressure. They do make money. And remember, if you see a PE ratio, that means they have profits. Profits to earnings. They make actually really good earnings. and they have a really reasonable PE ratio. They do have a dividend as well. Not something I would core hold, but you know what? I don't see it as a terrible thing there. So we'll keep it there. And we've got 2 left. We have Y and Z. And then we've got our 26 stocks. So Y is Allegheny. What does Allegheny do? Provision of property casualty reinsurance, insurance for financial services, operates through reinsurance and it's an insurance company. Ugh. Casualty insurance. They do make money. God, they make a lot of money. But it's also a really stupid expensive stock. Remember, $100 is not even going to buy us an eighth of a share here. But if we look, they don't have a Morningstar review. They are making money, but it's a reasonably high PE ratio compared to a lot of the other companies here. Not compared to high tech companies like Tesla, other stuff like that. But again, that Allegheny, personally, not something I would want to really be in just because of the high PE ratio. It's got low market cap, but they're not making the price is just really high. It's not something. Yes, you can buy fractional shares and everything like that. But the last one we've got here is Z, which stands for Zillow. So Zillow, got Zillow right here, and Zillow is going to get hit real hard and what's about to come to the housing market, and what has come to the housing market, and you can kind of see, but they lost money because Zillow went ahead and bought up a lot of houses, and then resold the houses, and bought up the houses, and resold the houses, and bought up the houses, and resold the houses. Zillow's an interesting one. Now, I'm not going to lie, I go to Zillow almost every day. I'm looking to buy a house in the South Florida area, but, I do go to Zillow every day. We can just kind of take a look at Zillow in the last year. It's been straight down and to the right, but its symbol is Z. Personally, not something I would invest in. They are not profitable, and again, people are saying if we look at the Morningstar, it's hold or different things like that. But again, they're not profitable. Remember, if you see those 2 things that say PE ratio and dividend yield, if those are both blank, especially in a rising interest rate environment, it's not something you want to play with. But here's the funny thing. Throw in $100 at it, who cares? We're good. So let's take a look at this list. You'll see we've got 1, 2, 3, 4, 5 dark reds compared to a lot of dark greens. And the dark greens are the ones that I would invest in outside of this experiment. So I will tell you, overall, I feel very, very comfortable. So I guess the question is, this will place at market open tomorrow. And it will be placed in the, I think it was called Matador, was the original name of the application. I just want to see. It was originally called Matador, and then they had a Matador. Come on. Matador. Yep. That was the name of it. It's called Matador in the days before it was called Public. It was called Matador, and they rebranded it. I am both a Public and a Matador customer, but I'm going to put in the rest of the orders, and these are all going to execute at market open on August 12th, 2022, and you can kind of see the orders again. The only one that's kind of weird is QD. The only one that's a little weird is QD because I cannot buy fractional shares of QD, but everything else I've already checked I can actually buy fractional shares of. So let's check up to Q just so you can kind of see what is going on and see if we can get everything side by side. Just so you can kind of see. Perfect. A, B, C, D, E, F, G. Oh, I'm in the way. There we go. A, B, C, D, E, F, G, H. Again, iceberg, it's weird. I, E, J, K, L, M, N. Doesn't have a single one. That's the, that knee one that we bought. L, M, N, O, P, and then Q, R, S, T is already in there. I'm going to add the rest myself, but the whole idea is to see how it is just buying random lettered stocks. When are we going to check on this? I think politics are going to play a lot in the stock market over the next few months, so I think one of the most interesting things is, when is, let's just take a election day 2022. Election Day 2022, Senate. Maine. Senate, let's just see. Election Day 2022, Senate, November. Oh my god. Okay, November 8th. So this is going to be November 8th is when it's going to be done, November 8th, 2022, and that should be a Tuesday. So what we're going to do is we're going to take a look at it on that Friday. Now, we might do updates, but essentially I'm going to end it the Friday after elections, because a lot of the political pressures will be off. Now, elections really don't change much in the scheme of things, but I think that's kind of an interesting way to do it. So November 8th is a Tuesday, 9th is a Wednesday, 10th is a Thursday, 11th is a Friday. So November 11th, 2022 is when I'm really going to revisit this and see where this $2,600 portfolio has gone. Interesting concept. I've laid out the concept. The stocks are listed below if you want to follow along, and you can follow along on Public. I'll leave my promo code for Public on the bottom. You can follow along with as little as $10 or $1. You know, you can do this with either $26 or can you do it with $1? I don't know. Let me see if you can do it with $1, because I don't want to make that statement and it's not true. So if I go ahead and I go in here, I want to buy a slice. I want to buy $1. Yes. So I actually can buy $1. So you can play along for $26. So I can buy $1 of AT&T, $1 of Ford, $1 of all of them for $26. You can actually play along, or $260, or $2,600, or you want to go crazy and put $1,000 in each. $26,000. There's a lot more green in this sheet than there is other colors, so it means I like these companies. Overall, look, there's some dogs in here, but there's a lot of green here. I like what's going on. It's a weird experiment. Dance, monkey dance. But it's an interesting monkey experiment I haven't seen someone do. So I hope you enjoyed the first part. Again, this is the first part. We got to see how it does of the ABCs of stock investing. This is Richard from No Pants Profits, reminding you that when you wear no pants, all you've got left to lose is your shirt. Hope to see you around. If you got any questions, please leave them in the comments below, and you'll see the full stocks listed below. Have a great one. Bye.